Hey guys, welcome back to another episode of Drinking in the Dark with Frugal Tiger. But I'm not drinking in the dark. It's Sunday afternoon already, and I'm just gonna be drinking a LaCroix. A lot of action this week, so a lot to get through. I'm gonna be skipping over a lot of names because there's just too much to watch, you guys, and we're all traders. We can only handle so many tickers at once. Anyway, let's go right into the action this week. Right off the bat, we got Tesla all-time highs from last week's earnings. They had insane numbers. The point of this is not to go over numbers. The point is to watch Tesla 909. It just keeps ripping higher, you guys. Watch the name. David Einhorn is crying. A bunch of Tesla short side analysts are crying. And all you can do is just watch the tape. This is not a time to be an analyst. This is the time to follow the herd. If the herd is moving higher, you jump in. All right, next stock I want to talk about is a stock I've never talked about here on the channel, which is DWAC. It's a SPAC. SPAC meaning a special purpose acquisition vehicle, similar to Space, similar to Clove. Two names that I talk about. Space especially is a name I trade very routinely. These tend to be very volatile. So the purpose of a SPAC is actually just a 15-second bullshit introduction to SPAC. Is companies that don't want to wait the 8 months to 2 year process of going through an IPO. Money is raised first. No one knows what's going to get acquired down the line. And the company, the SPAC itself actually IPOs as a plan to acquire another company. And then later down the line, it acquires a non-public company, essentially merging it and thus being traded publicly. Kind of a different route, but it's a great way to get a company to go public at a high valuation where it otherwise would not. Anyway, that's a quick bullshit introduction. I didn't plan that at all. Probably will be cut from the tape altogether. DWAC is a stock to watch because it had one of the most insane runs I've ever seen. I was trading this last week at 50 shares at a time, and I was making like $200, $300 on trading DWAC. So if you actually had some balls, Frugal Tiger, might not have balls no more. You could have made a lot of money on DWAC. It's just the action was too all over the place for me to make big money or have big size. This week, I'm watching it again. We'll see if DWAC has the same relentless run. It's a SPAC, but it also is supposed to be Donald Trump's social media project or whatever he's building. So essentially, these are two very volatile type themes here. You have social media companies, which tend to be a little bit volatile in the early innings, as well as the fact it's a SPAC, and SPACs can be very volatile early on, as we've seen from Space. So watch DWAC, brand new name. Anyway, NEO had its run up. I had quite a few shares in NEO. It went above 40. I actually sold mine at $39.50 because I thought we were going to get resistance at 40. It actually ran higher. I didn't rebuy it back in. I was going to wait for a strong breakout above 40. We didn't get it. It fell below that. We're going to see if NEO can make another run higher. It could be following Tesla, you guys. They're both EV plays, so let's not leave NEO out of this. Last thing I want to talk about from last week is Snapchat. And Snapchat dropped like 23% on Friday. It's at $58 a share. It's trading at $80 a share a few months back. And rightfully so, because growth is a huge deal when it comes to these tech companies, and Snap is not really able to demonstrate that. And I think after a certain point, people get tired or exhausted of different options for social media. Facebook, Instagram, all YouTube, everything. So Snap might not be able to capitalize as much as we thought it would. I have no positions in it, but I might be buying the dip as a quick swing trade. I don't know yet, you guys, but this is the name to be watching. Of all the names, maybe take this one a smaller size and keep it maybe a little bit swingy trade. I don't know exactly, but I think you guys should watch it. Let's take a look at what happens. Last thing, it is really FAANG week, you guys. It is FAANG week, not just because of earnings, but Netflix announced earnings last week and it is running. It's running higher. I tried to take a couple of short intraday positions. They did work out for me intraday, but the tape is strong and the tape is to the upside, and I can't deny that. And Netflix actually did announce great numbers. So overall, I feel like watch Netflix. I think this can run. And I know I mentioned I took some short positions on Netflix just intraday after earnings was announced on when I noticed the tape was weakening. But I also took long positions in slightly larger size as well, intraday as well, when the tape was strong. So trading Netflix both ways, but the tape is strong right now. Anyway, like I said, theme of the video, FAANG week. We have Facebook earnings this week coming out Monday. It's off almost 18% off its highs. It's at around $324 a share. It's at $384. I'm not saying buy this dip, but a lot of times when a stock drops this low, there's just usually algo related buying when it's around the 20% dip mark. I think it's around 18% right now, but we could still see it come in earlier. So let's pay attention to Facebook. Google is the next thing. I'm not watching Google as much. It topped out around 29.09 a few weeks back. It's right now at 2772. We're gonna see if earnings can, I think it might actually get back to 29.09 before its earnings on Tuesday. So we're on to Tuesday now. But at 2772, we could actually see a bad earnings announcement actually drop revenue. I don't really see that happening here, but a lot of these tech companies had a relentless run. So this is probably a very crucial week in the market as these tech companies are lifting the entire market up. Microsoft, probably one of the strongest in the tech names. It's at $303 a share, and it is a relentless run. Once again, all these tech companies are having a relentless run. This is once again Tuesday earnings. And one of the things is I was listening to an analyst price out Microsoft, not the only one, probably several different analysts. And a lot of them, like, I'm not talking about the Morgan Stanley where some analyst shoots the price target at 300 or Goldman Sachs shoots it at some ridiculous number just because the stock price is already here. Analysts feel like they have to raise the price targets now because the price is there. Not that bullshit, but a carefully crafted analysis based on fundamentals, earnings, and all that shit. A lot of real analysts that I trust that run numbers feel like Microsoft is a great name, a strong brand, but Microsoft should have a value around 220 to 240. That's what they feel like it's a fair value. Even factoring in the fact that it's a tech company, it's got endless amounts of growth available. That's what they feel. So it kind of goes to show you the state of the market, but don't trade based on analysis. Keep that in the back of your mind that that's a reasonable value. Right now, this tape is insane on some of these stocks. Microsoft, oh my gosh, be very cognizant of where it can move. It looks like it wants to go higher still. AMD, oh my goodness, you guys, one of the strongest tech names. Another name you should watch, almost at $120 a share. I know someone who was much poorer than me a few years back, who is much wealthier than me now, just over this name alone. AMD is one of the names to watch for this week. There's just too many. The funniest thing is, if I was doing this video 2-3 years ago, these types of earnings videos or preparing you for the week, there might be like 5 or 6 names to watch throughout the week. There are right now because so many stocks are running and so many things are going strong. And honestly, there's so many good earnings trades regardless that these videos are taking forever. So I have to cut out a lot of stuff, mainly because it's impossible to watch. Like, I have a lot of screens up and running, you guys, and I'm walking around. I don't sit when I'm trading anymore, but it's still too much to watch. It's very hard. So I'm just trying to leave the best names for this week. And which brings me to Twitter. Twitter, another great name, a lot of action. Not so much worried about resistance support here on Twitter. It's one of those names, if it breaks out, you buy. If it dumps, you short, okay? So watch that. Hood. Now, Hood has actually been relatively actionless, you guys. And so why am I bringing this up? I just mentioned I'm bringing up the best names. I'm very curious what's happening this earnings season with Hood. You know, we had a lot of issues with Citadel, which is one of Hood's largest customers, and a lot of other hedge funds who pay Hood for their order flow. And we're gonna see if these companies are still paying for their order flow or how that's working. Hood might not have explosive growth, you guys. And what's very obvious from the public demand for the stock is they don't really care about Hood that much. So we're gonna see if this earnings season does anything different. I actually don't think it is. So if there's one name that you could potentially watch or not watch, it's Hood. If you're feeling bored one day, just put it on. This is for Tuesday, okay? And then the last name is a name that I talked about once before, but I'm gonna mention it again, QuantumScope. It has earnings and EV is moving right now. So last week we saw Plug and we saw Fuel Cell have quite the run and then kind of break lower again. I'm still watching Plug, I'm still watching Fuel Cell. I was just tired of bringing up Plug Power almost every Sunday, but watch Fuel Cell and QuantumScope's earnings on Tuesday because this could cause the stock to run. EV seems to be on play right now, infrastructure bills and a few other things on the way. So Wednesday, I think Wednesday has the most amount of earnings I am skipping. So I'm watching ServiceNow. It is running higher. ServiceNow is another tech company with software to schedule tickets and things like that. So ServiceNow, I mean, just pull up a 3-year chart of ServiceNow. It does not look like there's a dip here, to buy. So watching ServiceNow. Boeing can sometimes make a good trade, but honestly, especially with some of the tickers I mentioned that will carry over from last week, you can potentially skip Boeing, skipping McDonald's, skipping Coca-Cola, skipping GlaxoSmithKline. Okay, let's talk about Twilio. Twilio is having what I would refer to as a Darvas box pattern. Darvas box actually refers to a kind of like a wider trading range. Where you can make money, where kind of like when it gets to a high point, you can sell, or if you're a short seller, you can try to make a short position on it, and once it gets to a certain level down or lower, it hits support and is usually a good time to buy. So it's in a tight trading range where you have resistance, support. It's kind of been like that since 2020. We're gonna see if Twilio can break out, but just keep that in mind about the Darvas box pattern with Twilio. It could make a great earnings trade, we'll see. But beyond all of that, it's actually a great action name on earnings. So just keep in mind that there seems to be easy resistance. It's easy to spot if you just pull up a chart, as well as easy support right now. So watching Twilio. Pinterest is off of its highs. It's floating around $58 a share. It hit 80 bucks a share a few months back. I'm watching Pinterest. We could see it might have something similar that I mentioned to Facebook, where before earnings we see a little bit of a run up, and it could, it could break. It could start to try to break out again based on earnings alone. And I don't mean break out to like back to 80, but we could see it start to reverse its trend and go higher. So Pinterest might head higher, it might reverse its trend. It's been trending down for some time. Let's see what happens here. Upwork, kind of similar. This is one you can skip if you're watching too many tickers. We can see if it has a similar kind of Darvas box kind of action, but once again, you can skip this because there's just too much to watch. Thursday, as I mentioned earlier this week, it is still FAANG week. We have Apple. I don't want to go to resistance and support on Apple, but honestly, just watch this tape. It is freaking relentless. Apple, Amazon, Starbucks, Shopify. Oh my God, there's too much action on Thursday. And American Steel, ticker symbol X, usually is a good trade, but once again, there's too much to watch. Friday, we have ExxonMobil. You know what? Just scrap that. Still trade Apple, Amazon, and Shopify. Of the Thursday's names, those are the names I'm watching. Of the Thursday name, believe it or not, Shopify is probably the best trade in regards to what day traders look for, which is price action. So FAANG week, you guys, basically all the FAANG names are in play. It's really difficult for me to point down the exact trade because I see a lot of action still in Tesla. I see a lot of action still in Netflix. There's potential for a lot of action in Facebook, and there's a potential for a lot of action in Shopify. There's no trade of the week. Watch the FAANG names and watch Tesla. Anyway, that's it from me. Grab yourself a drink and good luck this week. Let's survive another trading week and run it up higher, okay? Till next time.
I just want the money, 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 money.